Hello guys, this is your guy Michael, the selfless strategic trader. Alright, so guys, I want to update our curriculum for you guys, and based on your premium student, you're my student, and you shouldn't be ignorant of what I do. You shouldn't be ignorant of the way I take my trades. You shouldn't be ignorant of the things I look for when I come to this market, when I come to take trades. Alright, so I'll be walking you through some trades that I took recently, and they really got me some few pips, so that you also can be able to look markets the same way I do, and you also catch pips. Remember, just as I told us earlier, that try to be confident in yourself. Don't depend on strategy. Don't be looking for strategy up and down. No, that is not how to grow in this business. That is not how to grow in this world, in this business. What you need for yourself is to learn and understand what we do in trading. All right, I will start from my recent trades. That okay, I don't know when you will be watching this video, because this video is going to be here for other students that are going to be joining us in the future. But you that are here, that you know the right timing for this video, you know about this trade, that it has already fetched me how many pips, and I'm holding, and I'm expecting a reversal soon. As you can see that I set a limit there, so it has fetched me more than 450 pips. Yeah, more than 450 pips. How did I manage to catch trade like this? How? I'm going to walk it through, because I want you to see trades like that. So I want us to understand this market structure very well. I've made video for us on market structure before, telling us how that we trade higher highs and higher lows, lower highs and lower lows. So when we are talking about higher highs, we are talking about the highest high in the previous, in the last what's it called, in the last trend. All right, so let me show us something from here. Yeah, from here. And again, before I go into that, I will want us to understand liquidity grab, liquidity levels in the market. Because if you are able to understand liquidity levels in the market, it will help us to know when we should not be trapped into stop hunt of market makers. Yeah, so that we not be trapped into in their stop hunt. So we need to understand the areas of what liquidity. We should be able to know when they are going to grab our liquidity. So instead of us want to rush into market, we are going to wait till the market structure is broken, and we join the trade. Now, anytime you see all these weeks like this, swing highs, they are called swing highs and swing lows, and they are most times formed by all these things you are seeing. They are what? They are liquidity area. This wick here, green one, this red one, all this swing high, swing low, these things, they are liquidities, because those are areas where buyers and markets are dragging price. Buyers and sellers are what? They are dragging price. The reason why you are seeing the wick here is because the buyer first came into the market, they bought to the top, and the seller said no, we are not going to agree with you. So they also bought the market from the buyers. Are you getting me? So that particular event occurred as a result of liquidity that was pumped in at that particular time. Yeah, as a result of liquidity that was pumped in to market. Because for them to say we are not going to agree with you, that means there was each liquidity that was pumped in to make sure it's what it says. And the same thing with buyer. And if you understand the opening and closing of candles, which I know we are not newbies, those are the things we should have covered in our all those welcome to forex talks. You see that this is the market open for this big candle. Now this is the market open for the what, for, I don't want to use crochet now. Okay, let me try and let me just continue. So this particular area is the area whereby the market was opened. Seller came into the market, so the price came all the way down here. So when the price came on the way down here, buyers said no, we want to take over this market. Then this candle came in. Liquidity that were put into this thing was what made this candle and this volatility to occur like this. Then sellers came into the market again and said no, this market is for us. That is why this particular thing happened. Then they closed the market here, and the following day, because this is a daily time frame, the following day market opened again here. Market opened again here, the same thing. They dragged down, they dragged up, they dragged back down, then market stayed here. And the same thing here buyers said no, we still have small energy, so market opened there. You see this market here, it's break even on this candle, but the reason why it's we cannot really call it this thing, but if you look at it very well, the reason why this is a doji, right? So the reason why it closed as a green was because the price, the buyers were more than the sellers in this candle. Buyers they are more than the seller. You can see the arrow goes up more than it goes down, but the price closed at its opening and closing level. Where it opened was where it closed. That is why they call this thing doji, but it is a green candle because during that particular moment the green candle was more than the seller's side. The upside was more than the seller's side. That's why it's having a green color, but the market opening and the market closing is at the same level, as we can see. So anytime you see all these weeks, we just know that that's where buyers and sellers are dragging markets. So that is why they call it liquidity level, especially when it happens on a kind of high and a kind of low. Liquidity, swing high, you can see all those in swing low, swing high, low, high, low. So all those areas are liquidity levels. Look, if you look at all these places, they are liquidity levels. So those are the things that used to happen in the market. So how do we trade all these things? How do we join those people that are having the buying power or the selling power in the market? That is why we have what we call the market structure. But we don't trade market structure blindly, as we know. So let me proceed as a premium members. All right. Now this particular trade that I took, my bias was on this daily time frame. Daily time frame. So if you start from this particular area, and also remember that we have double bottom. All those, anytime you see double bottom in the market and you see double top in the market, just know that those areas automatically are liquidity level. Double bottom may not happen at this maybe an extreme edge or no. See, like here now, this particular place, that's a double top. This place and this place, as at when price was going up and price broke into this place and this place were what? These two areas were double top. Double top liquidity area. They are liquidity area. So when you see them, just know that there is possibility of markets breaking through them to grab liquidity, and that's what we see here. And we also check some example of such. All right, so Look at this particular thing now. Look at this area now. Look at this area. We have consolidation here, and we have lot of liquidity that are here. Lot of liquidity, because buyers and sellers, they are what? They are dragging the market. You can always zoom to this level in order for you to see your chart very well. So you can see that buyers and sellers, they were dragging market. Then the markets broke down, cleared all the liquidity that are light here. Then it continued to go down. Then we know that we are on what? We are on downtrend. If you bring up our trend line, we will see that here we are clearly on a what? On a downtrend. We are clearly on a downtrend. So here we now have lower low, lower high, lower low, lower high, lower low. So this low produced this high here produced this low. So anytime the last high, now on a downtrend pattern now, anytime the last high that produced a new low, anytime market closed above it, that means we have a change in what? In change in the market structure. So that means we have a change in the market structure. Then we are in uptrend. Are you understanding me now? All right. So now the way I'm making this video, the way I'm making this video for you premium members, but I'm having the feeling of sharing this to the general platform. I don't know. My God. Anyway, God will help us. Let me continue with what I'm teaching us. And this compassion is just always there. God have mercy. So now look at this particular area now. Look at this particular area. Okay, I will just make it. I know what I will do. Look at this. So here we have what we call break in market structure here, because this candle here, this green candle. Okay, let me use this. So this is the area of our last lower high. So it broke this low to continue downtrend. So normally we're supposed to expect price to trade into this area, then we sell again to continue our downtrend. But what happened here? Price broke above it and it continued up. So it broke above it, closed above it here, came back to retest, and was continuing on higher time on uptrend. That is change in market structure or break in market structure. Do you understand what I just showed you right now? All right, let us proceed. Why did I take this particular trade? All right, this is where I will stop for, because I want to share this with what is called with general group. But I will stop there. Then I will show the secret on how I enter this trade, and I enter with a good sniper. I will show. I'm very sure you premium members will have understood, but I will pause the video here, divide the video here, then continue the class with you guys. All right, so as I'm saying, now look at this particular place. Look at this particular place. This particular area here. This is another secret, secret to structure, mini structure. Because here we have a ranging market here. Price closed above it. Because this level now. Wait, let me give us this. Yeah, this level now. Yeah, this level that I mapped out. Sure, you will not do anyhow. All right, this level that I marked out happens to be price range around that level. Then this area happens to be our resistance, what retail traders will call resistance. So retail traders will want to sell around this place, because they've given them the concept of buy at the upside, sell at the upside, sell at the upside, buy at the downside. But we that are trading like market makers, we understand this. We understand that mini structure has been broken here. So now we have our higher high here, we have our higher low here. When price broke it, price came back to retest it. Then we have another higher high here, we have another higher high here, we have another higher low here. Price broke through this particular area, this liquidity zone, to give us another high, came back to retest it, higher low. We know that we always buy at the low when price comes to retest it, because we are not trading like what is it called, we are not trading like them. So price came back into this level, price broke up here to give us a new high, price come back here to give us a new low, and I joined the trend here. That's why they used to say the trend is your friend. So I joined the trend here to give us to give me an entry level, because I did not join this thing on time. Do you understand? Now the main thing that made me to stay by was because of this. So alright guys, so that's this particular video. The video was made for my premium members, but the main point is, if you can see here, I'm already on the trend reversal of that particular trade. I've closed the long buy that earned me more than 500 pips, and this is the sell now. So that is what we trading is about, buying at and selling. You buy when the price is very low and you sell when the price is very high. That is why you saw me buying this trade and selling at the same time. I just took profit on this trade. Like, if you can see, look at it here, this is the trade here. You see it has already closed. It hit my stop loss because I've been trailing the trade. So that is how to trade. That is how to do this thing. So it's the tutorial is for my premium. You can just join us. If to like my video, remember to subscribe to my channel, and you can make use of my free videos, free strategies to build your accounts, grow your accounts. It's not necessary you come for premium. Do you understand? It's not necessary you come for premium. You can just utilize what is on this YouTube channel and you will still be profitable. Do you understand? I love you guys, and I pray the Lord will give you understanding. All right guys, take care. This is your guy Michael, the selfless strategic trader. Bye bye.